'Twas the best of times, and 'twas the worst of times. It seemed pretty good at the beginning of this year, right? Everybody thought this was going to be a good year. 2019 was going to be, this was going to be the year, the start of the new super cycle, the beginning of a new era, the beginning of a new bull market. And it really looked that way. One of the big indicators that we follow, M&A, so historically M&A has always been M&A in the mining space has always been a leading indicator for performance of stocks. So when insiders in the mining industry start buying each other's stocks, usually the market follows. Usually investors in general follow and start buying the stocks too. It happened before the last run in 2001, 2002. There was a big spike in M&A. We saw M&A levels double or even triple from the years previous, from 2000s and the late 90s. And then things took off, and it was great. 'Twas the best of times. 2002 to 2008, spectacular. At the beginning of this year, it looked like something similar was happening. All of the big acquisitions we saw, Barrick and Randgold, Newmont Gold Corp, a bunch of smaller ones, looked like things were getting ready to do the same thing. In February, we were on pace. If you annualize the M&A activity in January and February, we were on pace to double the M&A that we saw last year, which would have been a huge increase and would have been a definite sign that we're heading into something pretty big. Fast forward to mid-May, late May now. It's not quite as good. We just ran the numbers on M&A. We just compiled all of the data. And now if you annualize, we're almost halfway through the year. So if you double and a little bit the M&A that we've seen, it's probably going to be about the same as last year. So it's not that great. Maybe we need to wait another couple of years. Or do we? If you look around here, things don't look that great, right? The gold price is holding level. Uranium prices are pretty depressed. And yet if you go to Australia, if you go to Perth, has anybody been to Perth recently? Is there anybody who's been to Australia? No. We're a little bit insulated in our little world here in Vancouver, Toronto, even the US. If you go to Perth, things are rocking. Australian companies are raising money. Brokers are excited. Investors are excited. We just saw an Australian company, Santa Barbara, buy out Atlantic Gold here in Canada, Canadian stock. It was a big win for us. We made 219% on that stock. And it's an Australian company. Not only is it an Australian company, it's one of the first buyouts I've seen in a long time where the company that executed the buyout did not have the cash in the bank when they announced the buyout. So normally when a company makes a buyout, they say, all right, we've got $600 million in the treasury, we're going to go and do a buyout, or it's going to be a stock deal. In this case, Santa Barbara said, we don't have the money, but we're going to make a takeout offer, and then we're going to turn around and raise the money. And all the brokers said, yep, you do the buyout, we'll raise you the money. It's a sign of extreme confidence in the market to do a deal like that. And it's justified. The markets are really, really, really good in Australia. It's incredible. The divergence. We looked at the performance of the TSX versus the ASX in the long term, in the long run. This year is the first time ever that the performance of the ASX during that period has exceeded the TSX. The percent gains are better on the ASX. The ASX has always been kind of a secondary market to Canada. And now the ASX is performing better. The valuations on ASX stocks are higher. The valuation for the gold companies per ounce in the ground is notably higher on the ASX. The valuations are much, much better. Why is that? Why is Australia? Everybody says, well, they didn't have Bitcoin and they didn't have cannabis, so all the money kind of stayed in mining. It's a mining place. It's kind of true. But if you followed what happened in Australia, something happened last December, right around Christmas time, that a lot of people didn't notice, but which has been critical to the market taking off this year. And that's the currency, the money. The Australian dollar plunged. So historically, the Canadian dollar and the Australian dollar have always been about at par. So the Canadian dollar is 0.73, 0.74 against the USD. The Australian dollar up until last Christmas had been about the same, and then suddenly it flash crashed. In a couple of days, it crashed down to about 0.66. So that's a notable divergence from the Canadian dollar and from the US dollar. So what happens when the local currency goes down? Well, the value of things like gold, hard assets, goes up. The result is that the gold price now in Australia is at record highs. So while everybody, we're sort of saying, well, the gold is not that great and the market looks kind of depressed and prices have to go up because nobody's really making a lot of money at this level. Well, actually, in a lot of parts of the world, like Australia, they're making record profits at the current price. The sector is rocking. People are making money, company coffers are big, brokers are excited, investors are excited. And this is all happening without people outside of Australia really being aware of that. And it's not just Australia. Argentina has seen its currency collapse, and the result is the Argentinian gold price, if you plot it, is off the scale. Brazil has had a big currency collapse. So the Brazilian real gold price, off the charts. It's interesting. Do you know what the most depressed commodity in the world right now is? The company that's at the commodity that it's at its lowest historic price. Does anybody have any idea? Guess? Is that? Anybody? Sorry? Silver. Not silver. Nope. It's not a metal. Close. It's corn. Corn prices hit a 42-year low in recent weeks. Some of the futures hit their lowest price in 42 years. As a contrarian, you go, wow, that's great. Doug Casey, who I work with, would, that looks interesting. And it does. But then the weird thing is when you look at production of corn, global production of corn, it's also at record highs, and it's continuing to grow. So how the hell are people producing more corn when prices are at a 42-year low? The old axe is that low prices are supposed to cure low prices. Nobody makes profits at low prices, so production stops, shortages ensue, and prices go up. And that's not happening. And it's because we're looking at the US dollar price. So the 42-year low is in the US dollar price. But if you look at corn priced in Argentinian pesos or Brazilian real or Indian rupees, India is another big producer of many agricultural commodities, or Russian rubles. Russia is also, not for corn, but for wheat, Russia is a big producer. Those prices are all at record highs. So they're turning out corn and wheat and soybeans as fast as they can. So you get this counterintuitive phenomena where you're looking at, prices are low, this, production should be going down, and production is going up at the same time. So, this unprecedented divergence in currencies is creating this really weird scenario where we're getting localized production of various commodities around the world. And I think it's only going to get stronger. If I had to bet, the US dollar is going to get stronger from here, at least in the short term, because the US is now flipping from being a net importer of oil to being a net exporter of oil, and probably the biggest net exporter in the world. That means all of the US dollars that went out from America into all the places around the world, there are those studies that there's more US dollars outside of America than there are inside. Now they're all coming back. So the US dollar is being accumulated in America, and that's going to lead to dollar strength, which means we're going to see more divergence. We're probably going to see these currencies, commodities prices in these other currencies go up from here, which will be great for local producers, not so great for domestic producers. So it's a real best of times and worst of times. It's a really bad time here, in America. It doesn't seem right. It's incredible when you go to Nevada. I was in Nevada a couple weeks ago. Best place on earth to mine gold, voted #1 by the Fraser Institute. This is the heart of mining. This has always been the center. There is nothing happening. There is nothing happening. The majors are still working. The Barrick and Newmont have done their big, merger, so they're going to, that's all happening. But on the junior side, I can't remember a time when there was as little happening in Nevada as there is. So we've got the worst of times. But if you're a Russian gold producer, you know what Kinross Gold, their best producing asset, their best money-making asset is not their Nevada operation. They have two great big Nevada mines, Round Mountain and Bald Mountain. Their top asset in terms of cash flow generation is their Russian mines. Because the currency depreciation, you sell in US dollars and you pay your costs in local currency, and that's a big margin. So there, it's the best of times. If you're in Brazil, I have a project in Brazil. If you're in Brazil, things are pretty good, Argentina's got challenges other than the currency, but just on a pure currency basis, the profits from an Argentinian gold mine are pretty good. So what do you do as an investor? It's a real, you have to pick your spots market. This is not a place right now. There are a few commodities where we can look and say, these should definitely go up. These seem like real contrarian plays. The platinum price is depressed however you look at it, even with the South African rand having gone down. The profits from platinum mining in South Africa, which produces 70% of the world's platinum, are not good. Most of these companies are not making any money. Lonmin is basically on the verge of going out of business. So platinum is one where the market looks good. That looks like a real contrarian play. If you can find a good platinum producer, we hold Ivanhoe, which is an up-and-coming platinum producer. Those are good bets on sort of a wide-scale appreciation in the commodity. But there aren't too many other sectors like that where you can look and say, yeah, gold is probably all gold stocks are going to go up, or all uranium stocks are going to go up like they did in 2005, 6, 7. So you got to pick your spots. And Atlantic Gold, this recent buyout of Atlantic Gold that I mentioned, 219% profit in 2 years, that's a good example where if you get the right stock, you can make pretty good profits. But it's not an across-the-board appreciation. There's plenty of other stocks that are very similar to Atlantic, at least in terms of the profile, the stage of the project, the size of the resource, that are not doing nearly as well as that. So what do you look for in a pick your markets? We're so used to, as commodities investors, playing the commodity and not the company. We're so used to saying, well, gold's going to do well. The battery metals were a good example. It was great. You could have bought almost anything in cobalt. Some of the other ones, vanadium stocks, all did really well as a group. And now they've all come back. So it's hard now to say what's going to be the commodity you should bet on. So we've got to bet on stocks. So what do you do when you're betting on stocks? In 20 years of looking at companies, I've come up with one question that I always ask when I meet a new company. There's one question that I always ask them first. And it's a really simple question, but it's really, really interesting to hear the answers. And I'll tell you some of the interesting ones I've heard over the years. So the question is just, what's your story? What's the story about? How did all this happen? Because when you meet a company, they'll often, oh, here's our map, and here's a big red blob, and the geophysics and the drilling, and back up. Where did this all come from? Where did this all start? How did this? And often what you will hear is they'll say, well, I was working in Mexico, and I was working for a major, and then I was in a bar, and I met this guy, and this guy had a project, and it looked kind of good, so we got it, and we started this company. And those answers are, if it was like, oh, you were just there and you happened to find something and you sort of ran into something, like how many great things do you find just walking around on the street and you're like, oh, $1,000, I just found it, it's just lying around here. That very rarely, those kind of stories, those kind of birth origin stories of a company very rarely succeed. once in a while, you meet a different kind of company where the answer is very, very targeted. So David Lowell, who is probably the most successful explorationist, at least in modern history and possibly in all of history, is responsible for about 10% of all the copper that's being mined on Earth today. When you talk to David Lowell, he says, well, I wanted a copper porphyry. He developed the copper porphyry model. So his advantage, his unique selling proposition, to use the term they use in marketing, the thing that's unique about him, he invented the porphyry model. So in the 60s and 70s, he looked at all of these porphyries around the world and said, you know, actually, when you see these minerals and these minerals together, you know you're pretty close, and then you go and you drill a hole in the center of it. And he developed this whole system where he could just look at the rocks on the surface, even if it wasn't copper sticking out of the ground, he could look at the rocks and say, I think there's something down here we should drill. So he had that whole model in his head, and he said, you know, I wanted a porphyry that has, you know, this attribute and this, and he had a very specific list of things that he was looking for. And he said, then I went and looked at about 1,000 projects around the world, and I rejected most of them. And at that time when I was talking to him, the one that he had settled on was a project called Toromocho, a copper project in Peru. And he said, yeah, it was, you know, the 1,000th project or whatever it was. And finally, when he looked through all the data, yes, this has all the things that I'm looking for. So I'm going to get this project. And he was very specific about, he said, it's this size now. We think we can grow it to over 1 billion tons. We think it'll be this grade. And sure enough, it was. He also said, there's a reputation that this project is metallurgically challenged. That's one of the reasons I'm able to buy it cheap. I don't think that's the case. I think by doing this and this and this, I can show that the metallurgy works. And he did it. He financed it at 50 cents a share and then sold it a year and a half later at $6 a share. And it's now one of the largest copper mines in the world. It's been developed. So he was very, very specific about what he was looking for. And that's what I love when you get the answer. When you ask, what's the story? How did this all start? And you get a very specific answer where people are like, we were looking for this, and we looked here and here and here and here, and we didn't stop until we found what we were looking for. We didn't just take the guy who we bumped into in a bar and he had something and yeah, it looked okay. So people who have a definite plan about what they were looking for, what they want to do with it, where it's going, what it could be. I mean, that's another question to ask people, ask companies is like, what do you think this could be? Like, if everything goes right that you're planning to do, what is this going to be? How big is it going to be? It's amazing, actually, when you ask that question. I've had people tell me, like, well, yeah, we think we could get it to, 300,000 ounces in the middle of nowhere in northern BC, and that would be pretty good. This will never be developed as 300,000 ounces. And like, your best case scenario is irrelevant, doesn't matter. So if your best case scenario doesn't matter, it's probably never going to actually reach the best case scenario. So you have no hope right from the beginning. Sun Tzu in The Art of War said, win and then go to war. So you want companies that have already won. They've done all the analysis before you ever put $1 into the company, before anybody puts $1 into the company, ideally. Those people have used their own money and their own time to make sure they have something that at least has a better than average chance of succeeding. If not, a guy like David Lowell in that case, I mean, he was pretty sure that that was going to work. He had a very convincing case about why that was going to work before he even started. So those are and in a similar fashion as investors, you want to keep looking for those kind of stories and don't stop until you find one. Don't get fatigued and say, well, I guess I want to do something, so I'll buy this, sounds okay. Like, wait until Warren Buffett says there's no called strikes in investing. You can pass on as many pitches as you want and keep waiting until that really good one comes along. Because they don't come along often. Like, this is, you may take months or years of asking these questions, but ask those questions. You'll be really interested in the answers. You'll start to see patterns. You can start to see certain kinds of companies that do different things. But every once in a while, you get that one where you're like, wow, this is really different. A guy says, oh, well, we've got satellite imaging technology that was developed at this major company, and now we're using it in this place where it's never been used before, and we can do something that no one else can. And that's interesting. If you look into it and they actually can do what they say they're going to do. That's pretty interesting.
Thank you.
Sorry, we're out of time.